In Money Watch, low mortgage rates have helped fuel a competitive housing market, but for some existing homeowners, it's been an opportunity to save money by refinancing. While mortgage rates have nudged higher this year, they continue to remain low. According to Bankrate, the average national 30-year fixed rate is just 3.27%. That's as of yesterday. So joining me now to discuss the topic of refinancing is Bankrate's chief financial analyst, Greg McBride. Greg, thanks for joining us. This is a conversation that I had with my husband about whether or not we should refinance when we saw interest rates drop. To start, how can homeowners know whether refinancing is right for them?
Well, Anne-Marie, if homeowners are in a situation where they have good credit and they're currently paying a rate that's 3.5% or above, I strongly urge looking into this refinancing because there are rates that are well below 3%. We see on Bankrate.com, we see people locking in 30-year fixed rates with 0 points at about 2.75% every day. So, there's substantial savings there. It's a way to trim those payments, $200, $300 a month.
Okay, so if you've never had to do this before, you don't even know where to start. So what are some of the steps that people can take as they begin the mortgage refinancing process?
Well, first step, get copies of your credit reports from each of the 3 major credit bureaus. You can get them for free at annualcreditreport.com. And the reason you want to do this, you want to make sure that everything on there is accurate before you start applying for a mortgage. If there's anything that's incorrect, you can dispute that through the credit bureau to get it corrected. Once everything there is buttoned up, then you want to shop around. Start with your current lender, see what they're offering, but don't limit your search to that. Look at your other local banks, credit unions, but also look at an online search. We have a free listing at bankrate.com and do that comparison search. And then you want to get quotes from 3 different lenders and ideally on the same day because rates move around. You want a true apples to apples comparison. You do it on the same day. That's how you can really assess who's giving you the best deal, not just the best rate. You also want to look at the fees and see who's giving you the best deal altogether.
Yeah, that is great advice. Some people who are purchasing or refinancing can also lock in a lower rate by buying mortgage points, also known as discount points. Can you explain what they are and what people should know about them?
Yes, and discount points, as you noted, Anne-Marie, it's just a way of buying down your interest rate. And 1 point is equal to 1% of the loan amount. So if you're borrowing $300,000, 1 point is going to cost you $3,000. And it's effectively prepaid interest. That 1 point may buy your interest rate down by 1/4 percentage point. Over time, that savings really adds up. But time, that's the key. The break-even point on points, usually about 6 years. So for the people that are strapped for cash, I'm not a big fan of it, especially with rates as low as they are. If you have plenty of cash and you can part with the points and you want to buy down that rate, you expect to be there for the long haul, it can yield even greater savings.
Great advice. Check your credit rating. Who knows, you may be able to save a few $100 a month on your mortgage. Greg McBride, Chief Financial Analyst for Bankrate, thank you very much.
Thank you.